In this video, I'm going to show you how to use 3 simple smart money concepts for trading order blocks. Hey, my name is Dom, and I know day trading smart money concepts can be a little confusing if you're not sure what you're doing. But these 3 simple concepts are really easy to understand and will help you make more profitable trades. So stick around until the end, and I'll explain everything in detail. Now, before you even consider taking a trade, you need to see these 3 things happen on your charts. First, you have to see where liquidity has been taken. That's either buy stops or sell stops, depending on whether or not the bias is bullish or bearish. Secondly, you have to see a break of market structure, which ultimately creates an imbalance in price action. Now, third, you have to wait patiently for price action to return to the area where that imbalance started from. We call this your point of interest, or POI for short. Now, this is the level where you'll hunt your entries. So for illustration purposes, let's look at these examples. Now, this is an illustration of a bullish market structure. And this is a picture perfect image, and I think you should screenshot this exact thing right now, make it your wallpaper, print it out, put it on your trading desk. It's really just good to be used as a point of reference when you're actually in the market. Now, granted, the market does not move as picture perfect as this diagram, but it's just to kind of give you a visual. And so what you see is 2 points of interest to take an entry. And I will say that you typically will get, you definitely will get 1 entry opportunity. It's highly likely you'll get a second opportunity. It's less likely to get a third opportunity, but it does come. It's just that me personally, I'm an impatient type of trader, and I typically like to go for, or I opt for the first entry opportunity that I get, and I use the second entry opportunity as to add on to position. Now, let's look at a bearish order flow diagram. Now, here you see bearish order flow, and you actually just see everything in inverse or what have you. So right here, you're looking at, you got that buy stop raid or that fake out. Okay, here that happens. So you get that liquidity taken, and then you have that order block that's created up here. It creates an imbalance, breaks market structure, comes back up to that first point of entry, right? Comes back into this order block here, and then price does what it's supposed to do and break structure again, and then you get a second entry opportunity, as well as you can see that this order block also created that imbalance. So it happens over and over, and that's what you're looking for to happen in the marketplace. So let's look at some charts and actually see how this looks in real time. Now, these were some trades that I took on CAD JPY that actually is a good review on, because it actually plays out exactly almost to perfection, as perfection as you can get in trading, which is very rare, to be honest with you. But we are looking here, when I'm coming to the chart, the psychology that I have behind it. Remember, we're looking for 3 things to take place. This is what I'm looking for in my charts. So this hasn't happened yet. Obviously, this is hindsight that we're looking at. But if I go back to the psychology that I was having when I first entered the chart. So first things first is I'm looking at, I already have my bias. I know that, the CAD is weak. The Japanese yen is pretty strong. So I've done all of my back end analysis and work. So I know that or I have a good hunch that we will be shorting the market at this particular time. So as price is climbing higher, right? I am looking for these buy stops to be taken out. Okay, that liquidity to be taken out. And what this does is this is trapping the buyers, right? Because as buyers are seeing this move here up, they're excited. They're seeing these big beefy candles. They're seeing, they're getting in breakout artists and things of that nature. So rule one has been met. Okay. The second thing that I'm looking for is a break of market structure, right? And I'm looking for that impulsive move to the downside in this instance to give me that confluence or confirmation that the market makers want to take this lower. And so we get that impulsive, strong move to the downside. It creates an imbalance. Okay. This strong candle right here creates a huge imbalance. So then we have an order block right here. Now we actually had we have this order block as well, but the reason I did not take entry here was because price already came into this order block and mitigated it. So the likelihood of us coming back into it was less than likely. Now, if it did, we probably would have seen prices continue to go higher. So once I saw that this imbalance was created, and okay, now my eyes go here and I'm waiting patiently for this move to happen. So it comes in, and I'll show you a little trick on the higher time frames. I mean, you can do this as well on the lower time frames, but what I will do is I'll use my Fibonacci tool to give me the 50% level of this last up candle here. So this was the area here that I knew if price came up above or came into this would be where I would like to take an entry, but then also it would be an area where I would tend to put my stop loss if I entered at the open of the candle. There's no right or wrong way of, I would say entering. It's just really a matter of like, what are you looking for? Are you looking for high risk, high reward, or low risk, high reward? Then, you want to refine, and you can refine all the way down as much as you can. But we see price come into that return to origin, and then we get that drop lower. You take your entry, and then boom. And then so there was actually another secret. If you miss, so this was the first entry, okay? So I got in on the first entry. But then if you miss this, right, and you wanted to, cash in on the move, you could actually just play this out by running your fibs from this level to this level, and you'll get the 62 retracement on that. And so that was a fib entry that you could have taken on there. But here's another setup that we had. We had sell. Now this is a bullish setup. So, and that's the reason why I wanted to show this one, because it kind of showed it consecutively. And so once I saw that price took sell stops here, that was that first rule. And then the second rule, we got that break of structure. We got that imbalance, right? We got that imbalance, and then price returned back to this area here, and that was my entry. So hopefully this video actually shed some light on how you can simplify taking entries on order blocks, how to trade order blocks using these smart money concepts. Now you can add other things, and you see my chart is marked up because not only can you just enter off of order blocks, you can actually make your Fibonacci. If you're a Fibonacci retracement type of trader, you could actually add that to this 3-step rule system that, if you're not like necessarily a order block type of person, you can use your fib tool and get these same great entries. So definitely take these concepts and apply it to your trading. I am very curious as to see the type of success that you have with this. So feel free to drop your thoughts in the comment section. Let me know how it works out for you. If you need more refinement on this and you want me to drop a more in-depth detailed video, let me know. I'm trying to keep these videos under 10 minutes. So let me know your thoughts. And as always, make sure you smash that like button to support the channel to help us grow. And I'll see you guys on the next video.